And it's time to talk business for 55 minutes going around the globe in the world of business. This is Business Incorporated, and here's what we have for you in the next 55 minutes. Well, it's no longer news that Dangote would be importing crude. But what's the implication for the Nigerian economy? We'll discuss that. We'll take a closer look at that financials from the NNPCL, 18 months financial they shared. It's not looking good at all for Zimbabweans as the cost of living keeps increasing and the Zimbabwean dollar keeps dropping in value. Good afternoon. This is Business Incorporated. I'm Ini John Mekwa. Good to have you here. Let's start off with what we have for you, beginning with the global grain prices. Chicago soybean futures slumped to a two-year low that's below $12 a bushel on Tuesday, weighed down by improving supply expectations from South America and concerns about demand from China. Corn futures also dipped and were near three-year lows amid plentiful supply, while wheat fell under pressure from cheap grain flowing out of the Black Sea region. The most active soybean contract on the Chicago Board of Trade, as the CBOT, was down 0.4% at $11.89 for three-quarter of a bushel. It hit $11.89 for a quarter of a bushel earlier, the lowest since November 2021. Soybeans has been under pressure from the prospect of higher supply coming out of Argentina. Also, demand is an issue with economic woes persisting in China, which is the world's #1 importer. Soybean prices have sagged since rainfall in South America boosted yields. In other crops, CBOT corn was down 0.5% at $4.38 a bushel, a whiskey away from the three-year low of $4.37 that it hit earlier in this month. Wheat also went down 0.4% to $5.91 for a quarter of a bushel. That's not too far away from its three-year low of $5.40 from last September. In wheat, Russian export prices continued to decline last week amid oversupply pressure in the Black Sea, with a 12.5% protein FOB wheat falling to $235 for a metric ton, according to traders. Oil now prices gained on Tuesday following a more than 1% drop the previous session as escalating geopolitical tensions in major producing region, the Middle East, fueled supply concerns. Brent crude futures rose 7 cents, that's about 0.07%, to $82.46 a barrel, while U.S. West Texas Intermediate crude was up 15 cents. I hope Dangote's demand is not adding to that, 0.31% at $76.93 a barrel. Both contracts fell over $1 Monday as a deepening real estate crisis fueled worries about demand from China, which is the world's biggest crude consumer, after a Hong Kong court ordered the liquidation of property giants in China Evergrande Group. Iran exported 1.2 to 1.6 million barrels per day of crude oil through most of 2023, representing about 1.5% of global oil supply. On the supply side, while an OPEC Plus meeting is set for February the 1st, but seems unlikely to see a decision on the key policy for the group for April, according to analysts' expectations. That story is going round the oil circle here in Nigeria that the President Bola Tinubu, is asking that revenues from crude oil sales from the NNPCL be moved to the central bank, waiting for some authority to speak on this, but it's becoming common knowledge around here in the news circle that this is a directive. We've seen some reactions from government officials that this might bring more transparency if it is confirmed that this is true. This might bring some transparency in the area of managing the proceeds and revenue of oil. Of course, we await the NNPCL or the Central Bank of Nigeria to confirm this story. And talking about the NNPCL, an interesting one, the Nigerian National Petroleum Company Limited, we know that they did not remit any funds to the Federation account in 2022, and they said it's because of the payment of subsidy. We know when subsidy was removed on the PMS. That was revealed by the Chief Financial Officer of NNPCL. Other matters arising now. There you see their financials for 16 months, a 16-month statement that they shared with members of the public. And we see that it's for the group and then for the company. Of course, NNPCL is now a company of its own. And because they have investments, they have some acquisitions, so they also have the group. So let's not just stop with these numbers that you see. We're going to delve into what those numbers actually mean and some of the implication of those numbers that we see right there. Of course, I think one of the first thing that jumps out at you is it's a 16-month statement of financials. Meanwhile, normally we'd see 12 months or at least 6 months. But let's get more on this with Mr. Gbolahan Olojede. He's a financial expert, joins us virtually from Lagos. Mr. Olojede, good afternoon. Thank you for your time.
Yeah, good afternoon. Nice to be here.
Good to have you. So the first thing would be, I mean, out of curiosity, why do you think that the NNPCL shared a 16-month statement? Normally we would see 6 months, half a year, or we would see a quarter, or we would see at least, or at most, a year. That's 12 months.
Well, that may be something to do with the birth of NNPC Limited itself. NNPC Limited is a creation of the law, the PIA, and I think the PIA was signed into law in August 2021, thereabout. So it is probably making an account starting from the day it was born as an entity up until the end of 2022. That's what it looks like.
And then, well, of course, we do not have numbers to compare with since this is their birth year up until date.
Exactly.
So we do not have.
That's the reason why there will not be comparative. I mean, you can't have activities before you were born.
Exactly. So we have giants like Saudi Aramco doing so well. They churn out about 9 million barrels. Meanwhile, here we are struggling with 1 million barrels. We can't even hit our OPEC. You know, when you want to compare both, is it an unfair comparison to put the NNPCL side by side with, you know, corporations like Saudi Aramco?
Well, in a way, it might be unfair, and that is because Saudi Aramco has gotten its acts together way back. Nobody is in any creeks in Saudi Arabia trying to prevent stealing of crude or anything. The technology, the transparency have been there forever. It has been accountable for several years. Unlike NNPC is just trying to get into that space of improved transparency, is trying to become a commercially viable entity, is trying to become an entity that is accountable. There have been years in the past when for several years NNPC accounts were not audited. So that's why, you know, you cannot place that NNPC as it used to be beside an entity like Saudi Aramco, which has been known for transparency, for accountability for several years.
Another thing that's missing in that statement that we see would be a sign of diversification of revenue. We know that, for instance, the NNPCL now has a 20% stake in Dangote. We know it has acquired and all, you know, but it's not reflected in that statement except I missed it. I mean, you guys are the financial experts.
Yeah, it depends on what vehicle was used for the acquisition. I'm not so sure, because if the NNPC Limited was the vehicle that acquired the stake, 100% it must show up on the financials. But unless we know exactly what entity, on whose book is the acquisition sitting, we might not be able to make any judgment call there. But the fact that it is not sitting on the books of NNPCL shows that NNPCL was not the acquisition vehicle for the stake in the refinery.
So how do we differentiate it now? Because, I mean, to an average Nigerian, when we say NNPC owns 20% of Dangote, for instance, then the expectations that that should reflect in the value of the company, at least, or in the group, you know, since they have now shared it. And then when you have retailers like Owen also acquired by it, how do we differentiate it?
Well, those are some of the calls that we should make to the to NNPC because those are very important notes and contents in itself in terms of numbers for an account of NNPC. If NNPC is a vehicle for that acquisition, that is very, very important. For example, let's say it was Federal Ministry of Finance or Federal Ministry of Finance Incorporated. I'm just saying, you know, that was used as a vehicle for holding that stake for the people of Nigeria, then it will not show up on NNPC's books. That is natural. So it is for us to, as we are asking now, then NNPC might make a comment on too about that, as to why the expectation by Nigerians that that stake should be showing up on his book, but it's not showing up, so they can tell us why it is not showing up.
And then we've been expecting the company to list since June last year. You know, a lot of Nigerians are hoping at least to make some money from the national crude. What do you think is holding that move?
I think it's a bit early in the day to list. Apart from the fact that listing in itself requires certain minimum requirement to be met. The other important fact is that the entity does not have enough, what I will call consistency of performance that is strong enough for it to list. Well, it may be argued that since it has an account of up to 5 years, maybe whoever is working on the valuation and, you know, taking it to the market can dwell on that as a basis for taking it to the market. But you see, the success of coming to the market will ride on the back of consistency of positive performance, and that is what will make it very successful. So if you ask me as an individual, I would love to see an NNPC Limited that will still run further for a couple of years and then come to the market, so that we have an history, an established history of consistent performance over a number of years that can form a basis for the attractiveness on the exchange. Now, if you look at one of the years in the past, I'm trying to remember which year in particular now, the profit that it posted was not even from its operation. It was from an extraordinary source. Now, extraordinary source does not keep repeating itself. So if I'm analyzing that kind of a year, I would discount it because he made money. He was able to make profit only from an extraordinary source, not from its own core operations. What I would love to see is a history of consistent profitability from its core operations over a period of time. That will, you know, induce attractiveness when it comes to the market.
How long do you think that can take to convince someone like you of the consistency, you know, in operations?
I would like to see at least another 2 years. I would like to see 2 years more of consistency and profitability.
Okay, so now we see that there was no remittance for 2022 because they say of subsidy. Now, subsidy has been removed, let's say since June, maybe May 29, end of May to June. What do you expect now that they say they are not being burdened down with the payment of subsidy? Because, of course, we hear that there's still subsidy somewhere. So what do you expect, you know, from their records, from remittances and all of that for the period now that subsidy has been removed?
I think remittances has gone up, and it has reflected in how the distribution to the various tiers of government from FAC account has swelled up dramatically. The monthly distribution from FAC has gone up significantly. So This might or must have been accounted for by the fact that NNPC had gone back to a season when it is now remitting back to the Federation account. It is commendable, though. But then, I think more transparency is still required, which is why, for me, I'm delighted to hear about certain news. I don't know whether it has been confirmed now, asking NNPC the proceeds to come to CBN, rather than a situation in which NNPC has the proceed, meet his own obligation from the proceed, and remit the balance. So transparency will be improved if all the proceed in the first instance come first to the CBN. So we know exactly what is going out and where it is going to. It is easier to monitor financials before expenses are already consummated than to, if it has been spent, you can easily justify. But let's see it before it is even spent. That is a better level of transparency. I hope it is true.
Yeah, well, we're looking forward to either refuting or confirming of that story from either the Central Bank of Nigeria, the federal government, represented by obviously the presidency, or the NNPCL. But thank you so much, Mr. Agbolanha Olojade, financial expert, for your thoughts this afternoon.
Yeah, thanks for having me.
Our next conversation is not very far away from there. If you tune to TV stations, radio stations now, the news is that Dangote Refinery will be importing crude from the United States, and mostly it's WTI. We know WTI, every day we give you global oil prices, crude prices, and we see that WTI is mostly cheaper than Brent. Brent is what Nigeria produces, and more expensive but sweeter and easier to refine than compared to WTI. So why would Dangote Refinery operating in Nigeria not go for crude that seems to be easier to refine, and yet reaching out? We're talking of issue of FX now, to buy FX from the United States. Well, whether they're buying from Nigeria or not, obviously, it's still dollars that will be used. So why would Dangote Refinery be importing crude into a country that is known as the giant of crude exploration in Africa? Well, let's talk. I know that Ladi Williams talked about this a bit during Business Morning earlier today, but let's look at the impact it may have, or it would have, on the Nigerian economy with Professor Ndubuisi Nwokoma. He's an economist, obviously, from the University of Lagos, and the Director, Center for Economic Policy Analysis and Research at the University of Lagos. Prof, thank you so much for your time. Good afternoon.
Good afternoon. Thank you for having me.
I know when I spoke to you, inviting you for this program and told you about what we'll discuss, you were worried. Share with us your concerns about this development.
Yes, thank you very much. I was worried because I found it to be an anomaly. Just like you said in your opening remarks, that Nigeria is like the giant of crude or something, the way you put it, in Africa. It's the largest oil exporting country. And therefore also have a refinery that is springing up, privately owned, though, even though Nigeria has some, the country has some kind of shareholding in it. It's worrisome that we are not thinking or actually doing the importation of crude from another country. That is the first thing, the issue of the worry, the concern. The second issue is like NNPC has actually spoken, one of their managers, top managers, that it's a temporary situation. So, which is to say that this will not continue. So I think that gives us a kind of succor. So kind of believe that yes, this is something, a temporary, phenomenon that will not last. For them to be importing crude from the US. Already before now, we had like 6 million or so barrels have already been supplied by NNPC and other oil companies to them. So, but that is not sufficient. So we hope that it will not last long, but definitely it's not what we actually expect to happen.
But what do you see as the impact on the economy We know demand on FX may be one, which is a problem for us now. But
Yes.
what other impact? How do you see it affecting?
Yes, like you just said, the first impact will be that we are going to make demand for foreign exchange. Definitely, you cannot buy a good from abroad without making. So that will put pressure on the foreign exchange market. That's the number one. And people had thought that when you have the refineries coming on stream, domestic refineries, that there will be less pressure in the foreign exchange market. But this other situation where they are going to import crude will actually not change that. And that is to say, to say that the cost components of the production of refined products will now be internationalized, because we are going to bring a crude from another country. We're going to import inflation from another country. And when you have the exchange rates affected, there's the pass-through effect between the exchange rate and inflation. Because if now in Nigeria, we have the rate for inflation going up. And many people have been able to attribute this to the instability in the foreign exchange market. So when you now have this pressure on the market because Dangote is importing crude from the US, definitely that pressure on the market of foreign exchange will still be there. It is not too different from what we have now, where we import refined products, where we need foreign exchange to bring in refined products. Now we need foreign exchange to bring in crude. So there's a little difference in terms of what we have now and what will actually happen when Dangote comes on stream. But like they have said, it's a temporary phenomenon, and we hope that that will not last for a long time.
Yeah.
Then the other issue is like we have by the time you bring in products, there's the cost, insurance, and freight components that will affect the landing cost. Definitely, the cost will still be the way it is. Then the insurance and freight will also be there, because you are going to bring in those goods, pay transportation for them, and then insure them, marine insurance and all that. So not much difference from what we have now. And we hope that will not last for a long time.
And Prof, there goes the hope that there might be a little bit of reduction in the price of PMS at the pump. I think with this news, that hope is already squashed.
Yes, I think that hope is almost, but many people have been singing hallelujah that when Dangote comes on stream, we will not have the price for PMS as high as it is now. That people will be able to have some kind of cushion, some kind of price reduction. But we hope this will not last for a long time. Just like the head of the part of the management of Dangote has told us that it's a temporary phenomenon. So we are hoping that it will not last for too long. If not, nothing has really changed. Nothing has changed.
All right, Prof, thank you so much for taking time out from your busy schedule to speak with us this afternoon. Professor Ndubisi Nwokoma, Director, Center for Economic Policy Analysis and Research with the University of Lagos.
Thank you.
Welcome back. Let's head straight to the market now. A little bird told me that the normal thing has happened at the NGX at intraday with a bit of pullback, which may even recover before the close of trade. Aniti Edes has the details.
Yeah. Good afternoon, Ini.
Good afternoon.
Yeah, that little bird of yours is absolutely correct, because first of all, we had our early intraday figures, which showed that there was a pullback. And of course, this is not surprising, because all this while we'll be saying Nigerian stock market is rising, increasing, gaining breaking new grounds. At some point, we've even broken past the 100,000 level. And slowly we went into the 104,000. So it's not surprising when the market decides to do a bit of a pullback, particularly when investors are involved. So putting your money where your mouth is, that's what happens to the market. Right. So now let's talk about the regional market performance, where we are, like as usual, we always start home front. Charity begins at home. That's what they say. So we start first with the Nigerian stock market. Of course, we've been talking about the gains, which at the close of Monday's trading session, we were at about 39.99%, just call it about 40%, which is much higher, almost the same, not too far away from what you had for the entire 2023 market performance. But for intraday trading session, the market was down by nearly 1%, and that's because of some trading activities, which is profit taking from the recent gains, which at the close of on Monday, it was 1.24 trillion naira gain. And of course, the market cap is nearly at 60 trillion naira mark. Can you beat that? So that's for Nigeria's stock market, still the best around the world, and still giving you good returns on your investment for those who are in the market. Now let's move over to the other side of Nigeria's market, of the African market. Egyptian Stock Exchange, we looked at the South African market, was in the green. Egypt stock market, it was mostly in the green, 1.19%, as you can see here. But for Kenya stock market, it was in the red as at the close of Monday's trading session, all thanks to investors' profit taking. Now let's talk more about the market and money, which go much more in correlation. On Monday, we saw that the Naira had made a pullback. It was down by 33.8%. In contrast with what it closed as at Friday, the news is everywhere. Nigeria's Naira, the country's currency, at about 1,340 something plus or minus, but at that threshold, it was down against the previous figure, which it closed at Friday. That's for the official NAFEM market, Nigeria Autonomous Foreign Exchange Market. But for the parallel market, which we cannot, we can't not but mention, it was about 1,450. No one knows whether it is going to go higher or lower. But let's talk about how it's impacting the stock market. And we have Abiodun Adedotun, equity trader at FBN Quest, to tell us more about this. Thank you for joining us, Abiodun.
Thank you very much. Good afternoon.
So now I'm sure you've heard about Nigeria's currencies. It's still having that fall. I don't want to call it a free fall, but it has been sustaining that downtrend. And of course, the impact is inescapable. It's going to affect the stock market. So now can you tell us, in relation to this and Nigeria's stock market having that pullback, now let's do a little bit of a marriage. What's going on in the market as we speak in terms of these two factors?
Okay, thank you very much, Victor. Directly, there might not be a direct correlation between what's happening in FX and what's happening in the market, and the correlation has not been direct for a while, because you can put a direct correlation if you have more offshore participating in the market activity, but that has not been the case. But notwithstanding, with depreciation of the Nigerian Naira, what it means is the Nigerian asset becomes more cheaper for any intending offshore investor to come and take position. So but there are a whole lot of things that it's actually affecting their participation in coming into that space currently. And in terms of what we're seeing for the pullback in the Nigerian market, the last time I checked, I think a few minutes ago, we were about 1.5% down. Today, it's purely profit-taking activity. The market has rallied about 40% or thereabout in January. We don't expect the market to continue to, just jump all the way like that. And as the popular saying goes, the bulls always take the staircase, and the bears, they jump out of the window. We just hope that this is not going to be the beginning of an unwanted trend.
Okay, so Abiodun, so that takes me to the final question, because we need to talk about other markets outside of Nigeria. Now, earnings week, with the US market is highly focused on earnings, and Nigeria is no different from that. Now, can you tell us what are the most current earnings being released, and how are they impacting the market? Dangote Cement, it has always been the one always making the market to be on the upside following the news of that acquisition. So how are earnings playing into the market as we speak?
The earnings is coming in. We expect a lot more to come in today and tomorrow, being the last day of the month. Personally, I would expect investors to reappraise position vis-a-vis earnings and, of course, what current pricing is doing. There might still be a bit of interest in some of the banking names. The consumer goods, the few we've seen so far, it continues to speak to the challenges in that space. And for the big ones, of course, the heavyweight, the Mike Tysons of the markets that have been pulling the weight. Only time will tell how much the billionaires will be able to keep the things afloat.
Okay, thank you so much, Abiodun. Of course, eyes are always on the market to see where the market's direction ends for Tuesday. So that was Abiodun Adedotun, equity trader, FBN Quest, for the Nigerian stock market performance at intraday. Now, let's move over to the Middle East, where we see the regional indexes maintaining the downturn, which we saw in the start of the week, which was yesterday. Of course, the Dubai FM is still maintaining that green color, still maintaining that upward trend, which it was as of yesterday. But for intraday, the Dubai FM, both of them are on the United Arab Emirates Stock Exchange, which we always mention here. Now, for the other side of that market, Saudi Stock Exchange, the Tadawul Index, of course, that's the region's biggest market, didn't really have that impact, but it was down by 1.29%. While the Qatar Stock Exchange down by about more than 0.5%. Now let's talk about the U.S. market, the U.S. futures. The U.S. futures, they slipped, and this is because, of course, the earnings season is everywhere, starting first with with January, where we're talking about the final quarter of 2023. So the result to be released. So traders there are expecting that. The Magnificent Seven, the likes of mega companies such as Microsoft, Alphabet, Qualcomm, and so many, what you call the Magnificent Seven, they will be releasing their earnings result. And so now the market is kind of wary about how the markets, how these stocks are going to come in, maybe in the positive or the negative. And at the same time, the U.S. Federal Reserve, which is the U.S. Central Bank, will begin their two-day policy meeting today. And of course, for that market, we also saw that the U.S. Treasury Department said it expects to borrow less than previously anticipated in the first quarter of this year. So that was why for Monday's trading session, the market was in the green. But for today, stock futures are in the red, Ini. So that's it for U.S. markets.
I'm sure at the end of that meeting, we will see some movement on the market also. All right, Anita, thank you so much.
Pleasure.
Well, let's head to London now, where Juliana is standing by. Juliana, good afternoon. We learned that HSBC has been fined £57.4 million for customer deposit protection failings. How does this work?
Is the second highest figure, or should I say the highest fine that the Bank of England have actually issued on a bank after last summer, where Credit Suisse was fined 87 million. And what's basically happened is that regulators in the UK have found that the lender, between a period of 7 years, were basically not protecting customer deposits. And this all goes back to a of banks set up in the wake of the 2008 financial crisis. And basically that scheme was set up to ensure that any customer that had deposits over £85,000 would be protected by this scheme without there being any sort of ripple effect.
Well, it looks like we're having some technical challenges with up with London, unfortunately.
And that the FCA conducted within HSBC, they found that between, I believe, 2015 and 2022, 99% of deposits
All right, unfortunately,
failing. In fact, the FCA were quite cutting with their words this morning, basically saying that some of these failings could have led to a significant collapse that would have affected global markets. So, as I said, it's a £57.5 million fine. It was supposed to be closer to £100 million, which would have been a record-breaking fine issued by the English Central Bank. But because of HSBC's cooperation.
All right, let's move over to Berlin now. Apologies for that. We're not able to conclude that conversation with Juliana because of some technicalities right there. Let's go to Europe, where we know about 2 weeks ago, French farmers are protesting now. About 2 weeks ago, it was in Germany, and thousands of tractors blocked many of the streets we talked about here. Now it's happening in Paris. Lars Holter joins us now from Berlin to give us the perspective right from there. Hi, Lars, good afternoon. What's the situation in France at this time?
Thanks for having me, Ini. Well, it's quite a spectacle, and that's not even surprising. We've had our own farmers' protests in Germany, and especially right here in Berlin, just 2 weeks ago, with thousands of tractors blocking the streets. But that is pretty tame compared to what's going on over in France. I just saw a video of farmers in the southern French town of Narbonne. They had stopped a truck loaded with red peppers and other fruit. The farmers had torched the truck, and while it was burning out, they toppled it using their tractors, literally pushing the truck over with a load of fruit and vegetables spilling all across the highway. It sent a very clear message because that entire load had been grown in Spain and imported to be sold in France at comparably low prices. Now, French farmers have had a hard time with cheap imports for a long time, and they are fed up. Now, those who are not setting stuff on fire, they're driving towards Paris. Many have already arrived there, and they're calling it a siege on Paris. And the police, of course, has reacted accordingly, bringing in military tanks and thousands of men to keep at least the most important streets open.
So does it look like they will get what they want? What do they really want?
So one thing, as I've mentioned, is that farmers want help with those cheap imports from Spain and Portugal or other countries too. They say the imports are ruining prices, and at the low food prices the French customers are currently used to, French farmers simply can't make a living anymore. That's what they're saying, especially because while prices have been dropping, production has become more expensive. Of course, there's a higher energy cost. There are wages to be paid. Farmers also want the government to reconsider their most recent policy of ending subsidies on agricultural diesel. That coincidentally was the straw that broke the camel's back for French farmers, just as it had been for German farmers earlier this month. Exactly the same issue. And they got a quick reaction there too. The government has taken a step back on that subsidies issue, just like the German government did before them. They also said they would put an emergency fund together of 100 million euros for farmers in need after extreme weather events. They will consider packages for organic farmers and vineyards to help them. And I'm pretty sure there will be more, because the farmers have given the government a list of 140 demands. I'm sure we'll be hearing more about support measures for the farmers over the next few days.
140, that's a whole lot, Lars. But let's turn our attention to the markets now.
Yeah, we're back on interest rate watch. In the US, the Fed is widely expected to hold interest rates steady at the end of a two-day policy meeting, but that is only starting today, so we won't hear anything before tomorrow. However, sometimes you gotta wonder, what are they even discussing that we don't already know? Pretty much anyone on the committee has recently said that it's too early right now to cut rates, but 17 out of the 19 officials there have also said that they expect rates to be lower by the end of the year. So interest rate cuts will come, but not now.
All right, Lars, thank you so much for painting that picture for us right there. Lars Holter from DW. All right, now let's head to Africa and talk about that issue of data and data protection. They say data is the new crude oil right now. So how do you protect yourself? How do you protect your data? How much is it worth to you, talking about your data? Now let's talk a little bit about this before we head to other stories on the program. And joining us for this is Mr. Wale Abu, who's the Chief Executive Officer at Liquid Intelligent Technologies Nigeria, and gives us some tips on how to protect our data at this time. Good afternoon, Mr. Abu. Thank you so much for your time.
Thank you, Brother G. Good afternoon, and thanks for having me in your program.
Right. So data is getting a lot of attention, especially with conversations around AI. How valuable are personal data now? What exactly make up those valuable data that I'm supposed to protect?
Thank you. So the digital economy is growing in leaps and bounds. As you know, things that were the stuff of science fiction before are now possible because of interconnected continents. Lots of deployment of infrastructure, digital infrastructure, has made financial transactions very easy. It's happening in nanoseconds, and information is now moving from place to place. Everybody is almost connected. There are millions of devices, millions of people connected on the internet, creating a huge economy. In fact, the digital economy is projected to be about $23 trillion by 2025, just a year away. So in this era that's dominated by digital technology, as beautiful and as rosy as it is, has created so many opportunities, it's also come with its own host of challenges, one of which is the issue of data privacy and data protection. Many countries and people and companies have now started realizing this, and hence you see the increase in data protection regulation. And Nigeria has also jumped on the wagon by enacting its own law in June last year, and also setting up a commission to ensure compliance with data privacy. So typically, if you're looking at what is it that constitutes data, everything, information that you pass, your location, your age, your sex, what you're doing online, where you visit, your data footprint is information. It is valuable. It is used in many ways, sometimes in training algorithms, sometimes in pushing data to you. But what concerns us today is not the responsible use of data, but the inappropriate use of data by cyber criminals, and how you can protect yourself, how companies can also protect users, and how governments can strengthen the frameworks around data usage, data collection, data in motion, so that people can detect, prevent, and respond appropriately to the increasing cyber threats in the world.
Could you share with us some tips? I know you have for personal, and then you have for businesses, organizations. Are there some tips, things that we should know to practice every day to protect our data?
Okay, yes. The basic starting point, I would say, would be, if on your devices, you need to set out multi-factor authentication, you need to set automatic updates, and you need to have strong passwords. Typically, people recommend a 16-digit password, long passwords that are unique for each account. And so some people have very weak passwords, which are easy to crack, and they use the same password across various platforms. So that's something that a lot of people take for granted. You need strong passwords. That's on the personal level. You need multi-factor authentication. You need to update your device automatically, or as soon as the update comes, if you're not automatically set up. On the industry side, you need education. You need to make cybersecurity training mandatory. It is a liquid. People need to get the awareness to understand how phishing email works, how social engineering works. Companies need to do penetration testing. They need to evaluate their systems constantly to keep up with the increased cyber threats. You mentioned AI. It's easy to automate attacks now because the bots that you use to attack, they're very cheap. So you have huge companies. When I say companies, these are people who sit down in offices and actually run a criminal organization that is all about hacking data and using that data for nefarious activities. Then for countries, you need to have the right frameworks to protect data for the country and to enforce compliance with people who collect data from subjects in your geography. That way we have a beautiful chain of individuals, institutions, and governments working in harmony to create a strong, resilient framework that prevents cybercrime and reduces or mitigates greatly the risk of data breaches.
You know, you said that password should be at least 16 words. I'm saying that I think the next line of conversation would be, how do people, and it is risky to have the same password across devices and all of that. Managing passwords will be another conversation because you forget your password or you misplace your password. You know, it's another issue altogether.
Well, there are password managers now, actually. You can maintain dozens of passwords securely. It's now easier than ever because the industry is also changing. It used to be, I know from personal experience too, that was very difficult remembering different passwords for different platforms. But these days, you've got so many ways of keeping several, you need one password, a password manager, and you can easily create strong passwords. In fact, most platforms encourage you, if you are typing in your password, it actually gives you an indication if your password is weak, if it's strong or very strong. Typically alphanumeric with special characters need to be there. A lot of people know this already, but we need more awareness, especially in rural areas. People are getting online without knowing that they're exposing themselves to risk. We hear of cases every time of people whose bank balances have been emptied because they clicked on a phishing link, which is sent directly to their device. They have no way of knowing that this is not real, you know. So things like that need to be properly disseminated by authorities, by institutions, and for people to also take direct charge of their own data. The NNPC is doing very well in this area, but they also have a huge challenge ahead of them. They estimate, I think, from the last discussion that was made public from them, that they need about 500,000 data protection officers just to cope with what we are producing in Nigeria. And you can imagine how long that would take to deploy, how humongous that kind of effort would be for the kind of country that we're in.
All right, Mr. Wale Abu, thank you so much for sharing those tips with us, especially the one with managing your password. I think it comes in really handy. Chief Executive Officer at Liquid Intelligent Technologies, Nigeria. Thank you for your time this afternoon.
Thank you. Bye.
And just before we head to the crypto space, let's tell you that Zimbabweans are having to dig deeper into their pockets to buy basic commodities as the cost of living continues to rise, with the food poverty line reaching about 155 million Zimbabwean dollar for a single person. That's according to latest data. The Zim dollar has lost more than a third of its value in this month alone. Tell me about what's happening to the Naira this year, with the parallel market standing at about 15,000 for $1. Sounds very familiar to Nigeria. I think this year alone, the Naira has lost about 43%. So we hope that Nigeria will not be in this position in the next couple of days. Let's head to the crypto space now with Laddie Williams.
Yeah, I join you that prayer. No, we will not get there.
Do we close our eyes, kneel down?
Yes, this time I'm joining you.
I know somebody will be very angry with you with that prayer, because we're not doing what we're supposed to do.
I know.
And we're doing the prayers, and we think
so
that the prayer will change things.
We need to make those actions. Yeah, and talking about your conversation about, passwords and, this world of, hacking and all of that, in the crypto space, passwords, keeping those passwords.
Yeah, that's your bank.
It's not easy being, your own bank, because if you lose access to, some of these non-custody wallets, definitely you've lost all your money.
That's it.
So in this crypto space, it's a tough world when it comes to passwords and all of that. But let's get a check on how the market is looking today. Let's look at the sentiment now. We see it's getting back to greed. It's getting back to a very greedy market at this point, 61 points. We're neutral for a couple of days for last week, into Monday. But now we're seeing, some investors looking quite bullish, at this point. They're no longer standing on the middle. They're choosing greed at this point. Let's look at the color now. We see it's still a red color, but it's a bounce though, $43,000, from sub $40,000 for Bitcoin. We're seeing a jump, at this time, but there's also a pullback right now this hour. XRP is in the green, AVAX in the green, and a couple of other altcoins. Let's look at the top headlines now this afternoon in the crypto market. Yeah, we see Bitcoin there down 0.21%, XRP. So it's still a red market, at this point. But let's bring in Element Damble now, financial market analyst. Hello, Element. Great to have you.
Oh, hey, Lodi, as always. Thanks for having me.
But right. So we're seeing a bounce in the market, but also an immediate pullback. What are the charts telling you about price direction for Bitcoin?
Yeah, I think in the short term, there's a lot of uncertainty. As you rightly mentioned, the last 4 or 5 days, we are seeing strength coming back into the market. But a lot of uncertainty still. I think the level that we are now has acted as a point of resistance. So again, the question is it able to overcome that 44,000 level and potentially head back to the highs that we saw earlier on in January?
Right, and we're expecting some data. The U.S. We have the FOMC meeting this week, and consumer. Seeing the state of the consumer in the U.S. How do you see all of this data impacting Bitcoin and Ethereum?
Yeah, again, generally, I think what we've seen is the U.S. economy as a whole, of course, growing more than expected in Q4 of last year. Consumer confidence coming out in the next few hours is probably going to be expectations as well. So you are seeing a lot of resistance or resilience from the U.S. economy there. And traditionally, that will be a good thing. But as far as the Fed is concerned, this may, lead to kicking the can further down the road in terms of rate cuts. And of course, if it's harder to have, the longer that we are going to see, monetary tightening from the Fed, the more we are going to see investors somewhat bearish in terms of really being gung-ho as far as investing in crypto.
Right. I guess we're all still trying to decide what 2024 is all about. Is it risk off or risk on? I guess we're going to find out at some point. Thank you so much, Element Damble. Thank you.
Cheers. Thanks so much. Thank you.
All right, let's look at the top gainers now. See who's top in the chart this afternoon. See Pendle, double-digit gain, 19.77%. See one of the new ones and say those are looking good this afternoon. 12% and 11% drop. Blur token 67 cents, 8.93%. Let's look at the top losers. We have CFX. They're one of the China tokens there, 23 cents, having a pullback about 3.90%. So we're seeing marginal drops there. Tron, 11 cents, that's down 1.18%. So the market is still quite greedy at this point. It was tending towards fear at some point, but now we're seeing investors trying to get back bullish in the market, Ini.
Yeah, thank you so much. I hope you can get Element soon because he still had a lot to say. And
yeah, totally. Yeah, well, you know how it is with time.
Yes. Thank you so much, Ladi.
Thank you.
All right, so that's it on the program. Thank you so much. Remember, you can always watch Business Morning, Business Incorporated on our YouTube channel, www.youtube.com/channels web, and then you check for either Business Morning or Business Incorporated. I'm Ini John McCann. Hope this has been a worthwhile 55 minutes. We'll do it again tomorrow. Have a great day.